Hi everyone, this is the next Tesla update for December 23rd, a couple of days before Christmas. And yeah, it's not looking too hot for the Tesla um, bulls, and it's probably going to get a lot worse. Um, so if you're not familiar with the work I work with the wolf waves quite a lot, and I find that using wolf waves on different platforms provides a tremendous edge in identifying specific patterns in the market that are very profitable. Okay, and one of the most profitable patterns is the wolf wave, and it is hands down one of the best indicators, zero lag indicators that I've ever used. Now, this is a monthly chart for Tesla, and monthly charts are great in terms of just getting a sense of where the general trend is, right? Each candlestick represents a month, and back here in November 2021, last year, that's when the structure of the bearish wolf wave developed. Okay, so that was indicating a 52-week high, and then a target was generated all the way down to eight. I think it's about $8. So yeah, $7 to $8. Now, is it going to get down to $8? I don't know, but and is it going to bounce first to 251 and then go down? It's anyone's best guess. But what I can tell you is that until the volume here starts to turn green and trade inside that Bollinger Band, this could even get worse and eventually fill this gap right here at $56. Now, monthly gaps are pretty nasty, okay? And there's binary events along the way for Tesla, such as deliveries and earnings. So, I mean, those are the ones. Those binary events are what the bulls can really hope for if they're very, confident about Tesla's future. But a pattern is a pattern, and these patterns are generated by humans, and I don't think this is a pattern that is a mistaken pattern. And with these gaps that are also identified on the monthly, they get filled almost 70% of the time. Now, there's also a gap, believe it or not, which I really hate to say, at $2.63. Now that's brutal because, yeah, I do have shares in Tesla. Not all my eggs are in that stock. I mean, it's diversified, and it's actually not shares that are for me. They're for my daughter. I have Google, FANG stocks, and then I have Tesla. I just added Tesla last month at 180, right? Just a couple of $1,000. She's only let's say 7 months, and she's got like 20 years ahead of her. For me, I don't know if I have 20 years if I'm patient enough to wait 20 years, right? So, it's kind of like when you're when you don't know too much and you're just growing up, then you've got the whole entire world ahead of you, right? So you can invest in these time sensitive instruments like shares or whatever, and then just let them grow as you grow as a person and develop your own skill set. But when you go into school, you've got a degree, you've got advanced mathematics and statistics. You have to do whatever it takes to truncate that time that you first experienced when you were in elementary school, in high school, And you've got to take all that experience and knowledge and truncate and optimize the time such that you're making the most amount of money with the least amount of effort, right? That's like what you're supposed to do, right? And when you when you figure it out, then yeah, you're great. But when you don't, and then the last resort is just to say, I'm gonna hold it for an indefinite period of time. And 20 years is just a lot, especially with what humans what humans are able to do these days with all the knowledge that they have. So I mean, this chart right here on the monthly, basically what I see here, I mean, simply you can tell that the centroid of each of these candles are moving lower than the previous, right? And it's not gonna stop until you get one monthly candle that closes above the previous centroid, previous monthly candle centroid. And unfortunately, it didn't happen for the month of December, and that's a pretty extended position. So I mean, the next major moving average is at 87, and then you got the gap at 56, and then you got this very precarious gap at $4 or $5. So if I had to take a guess, I think there's a good chance, a high probability, it's going to go down and retest $100 at least. Okay, and that's because that's just how the market works. It loves trading towards these round numbers. Okay, and then once it trades toward 100, it could overshoot because there's also capitulation that can occur once it gets to that point, and it might overshoot to $89.87. Now, when it comes to earnings, which is January 3rd, oh my God, that's the worst week of the year, right? So the first week of the year is pretty nasty, and then the second week it starts picking up with earnings. So January 3rd, if that's the earnings, then yeah, I don't know, like the gap could fill, and if it gaps lower, then it'll leave a gap open, right? And that increases the probability that a bottom is nearing. Okay, but then if it doesn't and it continues to move lower, then you've got that $5 gap all the way down here that was generated way back into, I think, 2010. So I don't know if that's going to get filled, but if it fills, then that's great, because that would be the buying opportunity of the century. And whether it bounces from there, of course it's going to bounce. It'll mean revert back to the 6-month moving average. But once it gets down to like $2, I mean, the 6-month moving average will be around, like, I don't know, like 56.25. So I'm not looking out that far, but I just know that the monthly candle is not a reversal candle, and there's no way that it's going to reverse, because there's no news that is bullish enough to push it back above 155 anytime soon. The only thing that could do that would be news from deliveries and then earnings. So technically speaking, if we look at this cumulative delta, which is representing the volume data points, okay, not price, then we can see that the volume is hugging the lower band of that Bollinger Band, and it's not changing its trajectory. Okay, and actually, if you look at the daily, it's been doing the same thing on the daily, and it can just stay there, moving lower for quite a period of time. Now, on the monthly, it doesn't look like it's showing a candle that's capitulated. Now, capitulation looks like this. That's a period where everyone's chasing the price of Tesla, and that is what might happen in the first week of January. It just could just go nuts all the way down and form this red, deep red candle, and then and then eventually take out that $60 gap. So short, I mean, in the next 2 to 3 weeks, there is a 50-50. I mean, 123. So it's trading closed at 123, and if it bounces next week, then I would, then it would bounce to retest 155, right? And if it's not able to get back above 155, basically, I'm using the way I'm thinking here is that it broke through that major moving average on the monthly, and then that moving average was considered as support because once it got close to it back here in November, it bounced. This time it broke right through, sliced right through that 50, and there is a potential for it to bounce. And if it does not get over that, then it could just continue to trend lower, right? The bounce is going to retest that moving average, and if it doesn't close above that, then it's going to close back down at 122. And I'm talking about January. I'm not talking about December. December, it could happen in December where it makes a $25 move. Let's see, that would be, no, it's not going to make a $25 move, right? That's 30% in the last week of December is not going to happen, right? There's nothing. So it could just bounce like 4 or 5% and then bounce lower again 4 or 5%. So plus or minus 4 or 5% for the last week of December. And then as we go into earnings in January, we could see a bounce because of earnings, and that could be a pretty big bounce of 15 to 20%. And then some follow through that might push it up to that 50-day moving average to 150, which would be a total move of 30%. So that is possible. However, if it doesn't, then it's going to drop another 15 to 20% in January. And I mean, another 50% drop from there would take the share price all the way down for another grisly month, January, all the way down to 54 by March. Okay, March or May. But yeah, it is extended and it's due for a bounce technically, right? But it's really hard to see a bounce come in when I mean, you would just give it a shot for a bounce because it is outside that Bollinger Band. I would say outside of that, it's a tail end type of trade where the likelihood of it continuing to stay outside that band is very low. So but it is still the month of December, and I don't think this this data point here is going to budge. Now January is a little bit different. So January, because you got the earnings, and that could create a green candle here, and if that happens, then that's a really good sign. That's a short-term bottom. Now, when you actually look at the Bollinger Band of the volume here, it's actually in its early stages of expansion. So when you take a look at the previous expansive periods, you've got like it actually especially on the long side, it persisted for quite some time, and when it expanded significantly with a pullback. Okay, so that pullback where bears were probably, or traders and bears were looking for some reversion, that could happen here too. But I think when you look at it, we're in the very early stages of the expansion here, and it could just like I think we are in between these two candles, and I'm looking for that one last shot Now, if this candle here, the next candle for January, this candle right here is not going to turn green. So you just have to accept the fact. Now, if the January candle turns green, like it did here, then we've got a reversal. And that reversal is what I was talking about, where it retests the 50-month moving average, which is the white color here, 157.25. Does not, it'll bounce there, and that's a 30% move. If it doesn't get above there and gets like half, like 120, 140, and pulls back, then we've got a setup where it can move actually such that in the month of February, we could see another 20% drop in Tesla. So I don't want to, I do have positions for my daughter. I don't own, and for me, I don't own any Tesla shares. Like I just have too much experience knowing that hodling is just not the way when you become older. I mean, if your parents have invested in Apple when you were just born and then they left it there for 30, 40 years, you're good, right? You don't have to do anything. Your parents are going to be retired, and you're now much older with a whole bunch of money, and you're going to try to look for investments. But when you're, at the age of 50, you're not going to be buying Tesla, right? For the long term. Okay, so that's my analysis. I think if I were to be super outrageous, outside of the box thinking, the target is $5. Okay, the probability of the Tesla gap at $60 is around 52%. Going into earnings, but it's not going to fill it on earnings. It's going to probably take the reaction from earnings would generate enough momentum to continue the sell-off into the end of January, February, March, April, and May. A bounce could happen from earnings or deliveries where it rallies like 30% in literally 2 weeks. And if it did, it would rally back up toward the 157. And if it actually trades above that and you get a green Heikin-Ashi candle for the month of January, then we're off to this next leg up to retest 400 by the end of next year. This TTM squeeze, it does take some time. Like here is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It took 15 months, basically a little over a year, for it to 15 plus another 1, 2, 3, 4, 5, 6, 7, 8. So almost 2 years for this to make a top, right? Now, it's also showing a squeeze to the downside, not to the upside. But as you know, hodling is a lot longer than, it's a lot longer than, hodling long positions takes longer for the price to develop as opposed to a bearish positions. Bearish positions move faster and more violently, right? They don't have to, they move down fast. So I would take the 18 months that I calculated here, or yes, I think it's about 24 months, right? 24 months, which is 2 years. And I would just say it would take this another year, so 6 to 12 months from the first green dot, because I was counting all the dots here, and that's 2 years. So the first green dot here, about 6 to 12 months, the bear market for Tesla should end. And if within those 6 to 12 months, the share price of Tesla will likely fill the 50, the 60, let's just call it the $57 gap or $69 gap, and then the $4 gap. Okay, so that's what I have here. I don't think you want to be dollar cost averaging until you see some sort of green candle forming on that cumulative delta Bollinger Band. Thank you very much, and trade safe.